Hi, my name is Isabella Farr, and I'm a senior reporter covering commercial real estate in LA for The Real Deal. I'm here today to talk about my story covering one of Brookfield's office towers in downtown LA going into receivership. So, in addition to being one of the largest alternative investment managers in the world, Brookfield is also one of the largest office landlords in downtown LA. It owns about 7.6 million square feet of office space and retail space in the city's central financial district. And earlier this year, it landed in trouble on two of those buildings. So it defaulted on $784 million worth of loans connected to the gas company tower and 777 tower. Brookfield defaulted on two separate senior loans connected to the buildings, basically because it wasn't reeling in enough income from both towers to cover the debt service payments. It's really a double-edged sword. First, the Fed raised interest rates 7 times last year, meaning Brookfield's interest payments on the buildings soared. So take the gas company tower. In February of last year, Brookfield was paying interest at a rate of about 2%. By December of the same year, that interest rate skyrocketed to 6%. And secondly, Brookfield has struggled with high vacancy rates at both buildings. Companies are not exactly chomping at the bit to lease office space in downtown LA, which has posed a problem for Brookfield. So take the gas company tower again, for example. At the end of September, the property was 73% leased, which was no change from the prior quarter. After Brookfield defaulted, there was the question of, okay, what happens now? What happens to the buildings? There are a few options that a company can take if they default. First, there's a foreclosure where the lender can seize and then sell the asset. Second, an owner can file for bankruptcy where the court will then distribute proceeds to creditors. Third, there's receivership, which is what happened in the case of Brookfield. So the CMBS lenders on the gas company tower filed a lawsuit against Brookfield, forcing the court to appoint what's called a receiver. In a receivership, a receiver will basically take control of the property. They have the power to hire a brokerage to help lease up the property. They also have the power to market the property for sale. In the case of the gas company tower, Greg Williams of Trident Real Estate Group was selected as a receiver. Williams has already hired colliers to help lease up the property, which will help bring in more income for the building. Williams can also eventually market the building for sale. Any proceeds from that will then go towards paying off creditors. In this case, it's the CMBS lenders. We're still waiting to see what will happen to Brookfield's 777 tower, which is the other building that Brookfield defaulted on in February. No court documents related to that building have been filed. There's no receivership yet. There's no foreclosure. So we're really trying to see what will happen in that case. This story was important to me for a few reasons. First, it really showcases the distress that we're seeing not only in downtown LA, but really across the country, as office vacancy has remained stubbornly high and people are still not going back into the office. And the story really gets into what happens after a default. What do borrowers do in this scenario? It also speaks to the life of a property. Someone buys it, they try to lease it up, they have issues with it, they default. What happens next? And following that trajectory is really, really important for our readers. What's next with Brookfield's downtown LA office portfolio still remains to be seen.